We have an exciting morning for you today. Noreen, would you like to introduce yourself?
Sure. Noreen Fierro. I am the Global Chief Ethics and Compliance Officer for Principal Financial Group. We are a 20,000 employee firm that's multi-financial product offerings, asset management, insurance, retirement. And so this space is obviously very interesting to me and my team.
Good morning, everyone. My name is Supriyo Chowdhury. Happy to be here. I'm the Chief Compliance Officer for the Americas for Natixis. It's a French bank. I'm part of the Corporate Investment Bank, and my remit is over the Americas for our investment banking activities, sales and trading. And we're part of the large banking group called BPCE in France. Thanks for having me.
Hi, good morning. Sabina Medlacanti, and I serve as the Head of Legal and Chief Compliance Officer for the Americas of ICBC Standard Bank Group. Before I forget, my views represent only my own and do not necessarily represent those of the ICBC Group or any entity within it. And if I make any mistakes, I may backpedal and say that they're not my views either. So in terms of my group, so I actually work within a joint venture under the ICBC Group, Industrial and Commercial Bank of China. It is a merger between ICBC and Standard Bank of South Africa. In terms of my remit, I cover the capital markets. We have separate counsel and compliance professionals that cover some of the banking activities, but a lot of the hub of what we do is based in London from the Standard Bank Group days. The merger happened in 2015. So to the extent that there is a nexus in the Americas, I will also support our London bank.
Howard?
Thanks. Hi, I'm Howard Wynn. I am the Chief Compliance Officer for Mizuho Americas. Been with the bank for about 5 years. I've been in the compliance space for over 25 years. Kind of took a winding path to get there. I was a lawyer by original design and then kind of found my way into compliance, institutional compliance. We're a full-service investment bank. Have all of the products you would expect to see from a full-service investment bank, from advisory, restructuring, capital markets, sales, trading, research. So happy to be here and happy to see you all.
Fantastic. All right, we're ready to go. So we have a few questions, Q&As for this morning, and then if anyone has any questions at the end, you could route them to me and we'll get through them all, hopefully. What are the most pressing organizational challenges when it comes to executing a successful compliance program in the landscape today?
So I'll start, and I think some of my folks from my firm are here, so they've heard this story before, so apologies if you kind of roll your eyes. But I did tell you that this is something I'll continue to say, right? So this is kind of the pre-RegTech, right? What does it take to be a successful compliance department? Because if you don't get this right, then the RegTech really doesn't help you, right? And I always say it starts from the relationship end of things, right? I tell my folks all the time, we're in the relationship business, right? If you build them, they will come. And you build relationships based on trust and transparency and subject matter expertise and speed to get stuff done, and good communication skills, which I'll kind of scroll back to in a minute. But you build those relationships, and then you solidify them by being solution providers, right? We're there to help the business or other control functions to get to the right answer. We try and get to yes, that's our goal, but we don't always get there, right? So what we do is we try and find alternate paths. If we can't get to the first yes, maybe there's a different path. So we provide those solutions, and then we've solidified that relationship by being solution providers. And then where does that bring us, right? So that then gets us to where we want to be, which we're viewed by our stakeholders, by the business, by the other control functions as real partners, right? They want to bring us in early and often rather than kind of at the end. So if we kind of work on those building blocks, then we have what I call a successful compliance brand, right? People want to come to us, they get us involved early, they get us involved often, and then we're there to help shape the right way, right? The path forward. So I also mentioned successful communication, right? I think we coined a phrase some years ago, and I see one of my old colleagues, it might have been when we were at UBS, and I call it the effective waterfall of communication, which is walk, talk, mail, right? And this is kind of a little anti-tech, but it's really kind of back to basics, right? The most effective way to communicate with folks is the walk part. Like walk down the aisle, speak to your folks one-on-one, person to person, groups together. It's much more effective than kind of, the mail part. But so you do the walk part. You can't always do the walk part. A lot of us are remote. Some people are here. Some people are different in offices. Foreign banking organizations, you have people all over the place. That's the talk part, right? Pick up the phone and call people directly. Get on a conference call, get on a video conference. That's the talk part. Second most effective way to communicate. Least most effective is the mail part. And I'm not saying don't use email, but I'm saying don't start your day with email. Don't get into the office and start hammering away at your 8,500 unread emails, right? What I tell folks is when you get in the morning, look at your kind of unread emails and say, here, I'm going to take 10 of them off the table and I'm going to meet with these people, right? I'm going to actually have real dialogue. And real dialogue means kind of trying to get together with folks. So that's kind of where we start from an effective compliance brand, as I like to call it.
Can I add a couple points? So wanted to just mention a lot of what you talked about really just goes to the culture that you're trying to breed. And you asked about challenges earlier. It made me think about whistleblowers and that being a real risk to a lot of firms where you have somebody on the inside go directly to a regulator and report issues. And I think a lot of what you talked about helps to thwart the possibility of that. But thinking more larger scale in terms of what kind of governance you need, I guess I'm a bit of a Baselist, if that's a word, and thinking about like the 3 lines of defense and what that means. And for us, one of the challenges related to the 3 lines of defense is I think many times you want to be able to do things across the organization globally at the enterprise-wide level. But in many respects, that's really a utopia because it's hard to have one consistent set of controls that operates across all different jurisdictions in which you operate. When I think about something like many years ago when Dodd-Frank, it is now many years ago, right? When Dodd-Frank was first passed in the United States, there was this expectation under the enhanced prudential standards to have a chief risk officer reported to a U.S. risk committee, and ultimately the U.S. risk committee would govern almost like a board. Well, what do you do if you're a foreign banking organization like myself, like not like me, but like one that I work for, and where we have a branch that operates in the United States? It's not a separate legal entity. All of the controls, the governance is abroad, overseas in mainland China. And there's an expectation from the regulators that real-time decision-making issues are escalated here and that governance happens here. Well, you have to then find novel ways to change your overall governance structure to allow and empower local branches to be able to operate almost tantamount to a board of directors that's sitting in mainland China. So I just raise this as an example of one of the challenges that we're trying to face, especially because many of us as organizations strive towards being able to have one size fits all across the entire globe. And in certain ways, that is a struggle and something that we certainly, depending on the regulations and the different regulators' expectations, something that we struggle with in trying to implement at enterprise-wide level.
Just to maybe comment, I think today 90+% of my day is spent on technology issues intersecting with compliance. So you can't do compliance without technology, and that ranges from reg change to even the BAU. Because if you think about those of us who have the prudential regulators, the mantra is self-awareness, self-regulation, self-identification. How are you going to do that without technology, right? And then with being part of a foreign bank, the challenge is, okay, what does local IT do versus what does head office IT do? And your dependency on those critical systems. So a successful compliance program has to be able to be aligned with the technology organization in a way that maybe we never had to before, and including strategic direction. So I think that's a key challenge today.
Can I raise one more? There's a reason I gave a disclaimer at the beginning, because I'm going to talk about very high level last November, something that happened with an entity within my group, and we suffered a ransomware attack. And I think one other challenge today is we're talking about technology, we're talking about data. There are a lot of vulnerabilities to which we are exposed, and I'll just mention very quick high level that cybersecurity landscape is changing, and that poses yet just another huge challenge to the way in which we operate, especially post-COVID, where we've become a lot more reliant on technology. And for many of us here, I'm sure if we did, hands up, are still working in a hybrid business model where you are allowing staff to work from home. So that's...
Yeah, and I think
Yeah.
just Supriyo, you and I joked before about the two of us actually talking on a RegTech panel. We've known each other for years, but back to the kind of IT component, I think we talked about a little bit in the room, right? Is most of us don't have the luxury of having an IT group built into our own teams, right? So how do we coordinate with the IT folks? How do we make sure that we're brought in early so that we can kind of help shape? And how does that collaboration work? Is there a separate group within IT that covers compliance, or is it more disparate? So that's certainly one of the challenges that we face as we continue to build out, both in the regulatory reporting space and in any space in particular.
I would just add the one major challenge I see is the speed by which we're all being pressured to get stuff done. You, as technologists, you are considered, from my lens, part of the first line, right? The business need to move faster, do things quicker, make the customer happier, whatever that is. Well, when you marry that with the need to comply with regulatory mandates that don't always work that quickly or are always very cumbersome, it creates a natural tension, which is why it makes it that much more important for us to be joined at the hip to solution things together. You guys are under pressure to get the technology in place quickly, fast, make it happen for the client. We're under pressure to make sure you do that the right way, and we have to work together to get it done. Otherwise, there's going to be missteps that nobody intends. And what I always like to say is, I don't really know your space. I'm not an expert in technology. You guys don't necessarily have to know ours, but you have to know enough to ask so we can come to the table and help you, so that we're not having to come in after you've spent months programming something and then we have to step in and say, sorry, you missed 3 steps here. A regulator in California wants you to have 6 disclosures before the customer can click on, yes, I want to do business with you. And I think it sounds so simple, but in the day-to-day of how life works and how work works, it doesn't always happen. And it creates a lot of frustration, I think, on both sides. So that's, to me, one of the larger challenges I see now, just the speed by which we're all being pressured to get stuff done.
Just one more comment, if I could. I think the other thing I would suggest is that the IT book of work is already set in stone long before your issue pops up, right? So the art of compliance is, how do I make the business case? How do I escalate this to senior management? How do I rally enough support that I can reprioritize that IT book of work? Because if I went today, they're going to say, come back in 2026, right? And it's nobody's fault. It's just that there's a full plate. But I may have a regulatory driver. So you have to figure out, if there's a compliance officer, how am I going to fulfill the regulatory expectation, whether it's an expectation, whether it's a specific remediation point. How do I slot that into the book of work? And you've got to make a compelling enough business case and bring it to senior management and be able to articulate that and get the reprioritization. Otherwise, you're not going to meet your regulatory needs. Just wanted to highlight that.
Yeah, and Supriyo, you also have to walk that line of, we can't always say everything we do is a regulatory requirement, because that story gets kind of old quick, right? So you do have to pick your battles and say, all right, this one, we have to do this one, because if we don't, this is an MRA waiting to happen, this is an MRI waiting to happen. Or we've seen 3 other firms get fined for it, and guess what? We have the same risk here, right? So because a lot of what we do is always, well, this is a regulatory requirement, but you have to pick that battle, right?
Howard, I think that's a great point. If your business partners are listing every technology as they have under this is required by regulation, call BS. I'm telling you that right now. It's not true. But it makes the lines blurred. Most companies are not going to say no when you say this is required for regulatory, especially if you're Fed regulated, or they're not going to do that. Optically, they're not going to put themselves in a position to make it look like they're not prioritizing things that are needed to comply with regulation. So what I've seen over the years is things start to creep into that column that truly are not, in fact, required. And I think as you're trying to parse and prioritize, being able to sit with your compliance partners and really understand what is being put on that list, because it truly isn't there to make sure your company is compliant, is different than things that just kind of make their way there because business people will know it'll get the prioritization if they say it's required. So that's a great call out.
But the flip side is also that there's a danger in improperly categorizing things. And I'm going to give you guys an example, which we talked about earlier. Sometimes the tech folk, the IT folk, believe that something's completely within their purview, and it doesn't necessarily need to have compliance sign-off or sign-off from others in the bank, especially if it's an established system, process, technology. They believe it's tried and tested. I'm going to make this little tweak. And I'll give you an example in my bank. This happened last year, I want to say. So we have controls around if you're not touching your computer, it automatically goes into lock mode. And there's, to help with the culture in the firm, there is branding sometimes that appears across the computer screen. So for Black History Month, they decided as soon as the computers get locked, and they changed the timing of the lock so that it was something like after 2 minutes of inactivity, this banner would appear. Well, unbeknownst to us, as the banner appeared, the entire banner needed to kind of go through its streaming in order to get back access to the systems. Well, think about our traders sitting on a trading desk, maybe taking a phone call from a client, not necessarily touching or moving their mouse, and now all of a sudden it's locked, and they're trying to enter something into the system, and they have to wait for this beautiful cultural banner to pass. I will tell you, I filed an op risk event on it, and we immediately got rid of it. But having said that, that's an example where sometimes you don't realize that there's a compliance or regulatory nexus, and sometimes you do. It's something small, but you have to find that walk that fine line.
That leads us into the next question. When it comes to RegTech, how do firms approach engagement with technology, whether it's in-house or through a third party?
I can start with that. Technology is a very broad category. In many ways, as I talked about cybersecurity earlier, we are tech firms. We're quasi-tech because we're so dependent on them. COVID sort of underscores that, but at the same time, we also depend on technology. So I think at the outset, you need to identify the specific use case and the purpose for the technology, and then you need to figure out, is this something, if it is a technology that you need to utilize, something we can develop in-house? Are there third-party service providers that can provide it to you? And if it's something new and novel, for us, we go through what we call an NPP process, new product approval process. And there's very specific vetting, different stakeholders across the organization that provide input. We also make decisions as part of this about whether or not this is something we want to develop in-house, or are we going to outsource it? Even though it might be something technologically that you can develop in-house, you have to think about whether or not you are an outlier in the industry in developing some sort of system in-house, and whether or not you really want to be the poster child for wrongdoing if something goes wrong. To give an example, think about AML. There's a regulatory expectation today that you screen all of your clients against the database, what I like to call the shady actors and individuals database, so the shady characters database. We're not in the business as banks and financial institutions for knowing we know the AML regulations, but AML is not our main bread and butter. That's not what ultimately drives the bottom dollar for us. It's the services that we provide. So certainly we can develop some sort of an in-house tool to be able to do a daily dump of all of our clients or even transactions against certain filters. But if something goes wrong and we're not up to date on the technology or specifically on some of the screening, is it really worth the risk? And it might make more sense in a situation like that to outsource it, especially when your colleagues in the industry, your counterparts, even regulators are also outsourcing it to key vendors. So if you get to the point where now you want to outsource it to a key vendor, Then you need to kind of go through, and there's regulatory expectations around this third-party risk management. We have a very robust framework that looks at all different stages of the life cycle of a relationship, down to, for example, risk rating, the relationship at the outset, thinking about things that are important to our board, like doing even a sustainability rating, and having that factor into the overall risk review rating of the specific vendor that you're doing business with. And then that also triggers whether or not you're going to be doing due diligence at what specific points and intervals. I should mention one other thing too that's worthy of mentioning, which has to do with one of the things that's also important to us, especially if it's a third-party engagement, is getting certain contractual representations in the contracts. So for example, as a foreign bank that's state-owned, anti-bribery and corruption is very important. The risk rating we assign will drive how robust the representations are. As I talked to you earlier about having that cyber incident involving one of our affiliates, there's certain cyber reps that we want to have in the contract, but depending on the relationship and how much of, let's say, a shareholding they have in the overall industry and how many other entities utilize them, sometimes you don't necessarily have the bargaining power that you want to get the representations you need in there. But ultimately, that's sort of high-level overview of how we handle the engagements.
Just maybe camp onto that. I think today, the complexity of what we have to do from a technology perspective counsels more in favor of the build than the buy, especially if you're not a giant firm with hundreds and hundreds or thousands of technology professionals. You have to be able to, and then you need a kind of a speed to market, right? So, and the diversity of skill sets required to build the kind of systems today you need, for example, trait surveillance, voice surveillance, and now I'm going to talk a little bit later about the implications of AI, machine learning. To have all those skill sets in-house and build a system that's fit for purpose for our businesses in the time frame with which we need it, very difficult, right? So I think that's the trend. We're going to talk more about that later, but just want to kind of add that in.
Yeah, I think part of it also is, and I think a lot of us are, it's kind of groupthink, right? Because if something is a service that everybody needs, then we tend to gravitate to, okay, well, these guys have been in the industry a long time, they've been doing it for these firms, let's look at them, right? So I think for a lot of the new RegTech firms out there, it's a little bit more difficult to break into because just we're going to be wary of new technology. Okay, so who have you worked for before, right? What's the service? But I think we have to weigh that against, well, some of the old line providers aren't doing such a great job, so there is opportunity for others to break in. And then how do we analyze how good and how sustainable is it going to be, right?
I think the other challenge sometimes is, and I'm going to give a true lawyer answer, which is it depends. And when you're an organization that is legacy system driven, that doesn't have one central, customer database, whether you build or buy is really going to be dependent on how easy it is if you buy for that system to hook up to the 30 systems you would need it to, if not more, to actually do the job you're hiring the vendor to do. And I do think that's the reality for a lot of companies out there that haven't made major capital investments to centralize data. Many of us, especially even in the global space, you're not always going to have, just for data privacy laws, like you're not going to have one central data warehouse that has all your client information. And so making sure you're evaluating the ease of which the systems hookups are and can be, and what that timeline is to do, what that rollout, what that implementation would look like, is really important. And that doesn't always lend itself to automatically assuming you're going to go external. And so I think as vendors, you need to make sure you're addressing that. I know many of you do that, but the consideration when you're in-house and having to make those decisions really has to hinge on how easy would that tool be to hook up to the 50 systems it's going to have to hook up to in my organization. And I think that really impacts the decisioning.
I can't even underscore just how important that point is. if we looked across this organization, I mean, here, the audience, and we tried to understand a little bit about where each one of you guys are from and where you work, and even as I think about the history of where I've worked over my years, so many times you go into an organization that has been subject to some sort of merger, acquisition, they've acquired some other group, and what happens over time is you have these legacy systems that coexist with your utopia of your enterprise-wide system. And in the case of my firm that had one of the entities go through that cybersecurity attack, and this is public, part of what caused the vulnerability is a legacy system that had not integrated with the larger whole. When I started off in the industry in the early 2000s, and I was at Bank of New York at that time, Boney, and it acquired ultimately Mellon Bank, and they went through their acquisition. We used to call the internal systems legacy BNY or legacy Mellon, and they just coexisted. And this represents real risk, real vulnerabilities, but the importance of the point that you brought up, Noreen, just cannot be underscored more. And it's something that just coexists with the way that we run our governance today.
And maybe just to camp on, I think just from my recent memory, inquiries I've had to, respond to from, for example, FINRA or other regulators, it's very, very data intensive. And it gets back to your controls, your governance, your change management, and all these issues kind of conflate together, to form your regulatory exposure and risk. And if you look at some of the pretty massive enforcement actions of late around record keeping, it's about record keeping, data retention, data governance, big trend, and this is not going to stop.
So that leads us into the next question. Supriyo, if you'd like to take the one on what approaches are financial institutions having when it comes to solutioning around technology risk and compliance?
Sure. So in the last, to echo the points around cyber, we've started to think more intensively about technology risk. And so technology risk originally kind of came out of, it was sort of an offshoot from the operational risk function, and then started to kind of develop its own legs, and it reports into me. And so when I say technology risk, I'm going broader than just purely cyber. And it goes to all the pillars. We're talking about the governance, the change management, how does it align with business strategy, but also regulatory considerations. So, we have technology risk function under me with different disciplines under it, but we also have technology risk governance. So we have a technology risk management committee, which is a subset of the ExCo of our CIB Americas platform. And so this has been very, very important to be able to convey to our prudential regulators, like the FRB, that we've got a strong governance and senior management engagement on these topics. And it's probably the most, it's grown to like 90 minutes now, and we could probably go on even further. But it's interesting because the senior management is now engaged on these topics in a way, and I think I want to highlight, it's imperative that they do that, and they're engaged in these topics, and we're creating that awareness and articulating what is the risk that we're wearing, because it's extremely complex topics, like vulnerability is a topic, cyber is a topic, and then even within cyber, there's different foundational elements. So the ability to articulate and synthesize these complex points of senior management to the point where they're assimilating them is a key challenge for compliance officers, and to be able to be in lockstep with those who are, where your CISO sits in your organization, sits in different places, but compliance and CISO have to be in lockstep. And at the end of the day, the organization needs to have that awareness at the senior executive level, because difficult decisions have to be made around investment in infrastructure to get to the level where our regulators expect it. Because in a lot of ways, if you look at, I don't know if you guys do, but I get alerts from like Homeland Security and other, it's become a national security issue, right? And so I think the regulators are deathly afraid of a catastrophic event that gets to the financial system through technology. And so every financial institution has got to raise the ante on the protection against those types of intrusions, right? Because it's rising to kind of a national security level. So long-winded way of saying technology risk key, senior management awareness key, up to, for those of us who have a U.S. risk committee, we spend a lot of time with the U.S. risk committee on these topics as well. So I would raise awareness all the way up to your board.
Supriya, I'd go back to change management for a second, because that's, I think, a challenge for all of us, right? And part of what, let's take regulatory reporting for a second, right? A small little change can affect hundreds of thousands of trades over the course, depending on what kind of asset class you're in, right? So I think one of the keys, across the board, and I think all organizations struggle a little bit with it, is making sure that your technology folks have an awareness that before they even make a slight change in something that's going to affect a regulatory record, that they involve the compliance team, so that you make sure that the regression testing, whatever is going to need to be done, gets done before even the slightest change, because the slightest change can have a massive effect on regulatory reporting, for instance.
And I think the other piece that sometimes gets lost, because it's probably the most boring, technology risk can't be considered without understanding what your business continuity plan is, right? You have to understand what your BCP plan is. So you're going to go to a vendor. Part of your technology risk assessment has to include what happens if there's an issue with that vendor. And I don't know how many in the room were impacted just in the last few months by the CrowdStrike issue, but I think most industries, most companies had some level of exposure there. And that's when those exercises that we all get forced to go through, the BCP things, come into play. And you realize when they come into play for real, that exercise maybe was modestly helpful, because then everybody's scrambling. But I think as you're assessing technology risk, you have to also assess what's your plan B if something happens, and build that into your overall risk profile for the vendor solution or the technology itself. Especially if it's a key vendor that's processing key transactions, customer data, all the things that keep your business going, hour by hour every day, to understand what that plan B is. And I think that it doesn't need to be dispositive. It needs to just be a data point that gets considered for technology risk around regulatory and governance holistically.
And that's a great point. And can I just camp on to that? So I think today, and this is a topic for like a whole other conference, but operational resilience is a key thing that we're all starting to think about and starting to define it. But in my lay person terms, I'm a lawyer by background as well, but I think of it as it's BCP meets IT meets compliance meets technology risk. It's all those things. So what we're starting to do is take a multidisciplinary approach, because operational resiliency is not just when an incident happens, it's BAU, and you need to define that. And what we're doing is developing playbooks that are cross-disciplinary, that are scenario-based, again, sort of, trying to be forward-thinking. Not that you can always anticipate everything, but to have as many playbooks as possible that are scenario-based on what we would do in the event of X, Y, and Z happening. But I think today that multidisciplinary approach is absolutely imperative, and we can't operate in the traditional silos that we did.
I'll add one more thing to that too, just on the whole plan B and thinking about it from an op resilience perspective. Sometimes the plan B is that there is no plan B, and you risk accept. If there's certain regulatory reporting obligations, and you have a specific, for example, swap data repository that you're reliant on, and something happens and you can't continue to utilize them for whatever reason, you risk accept, and there is no backup solution. But I think operational resiliency is a really important point. We've learned through COVID that BCP matters, and now we're figuring out if this is post-COVID or mid-COVID or wherever we are in the stages of life post-COVID or mid-COVID, we're trying to figure out, okay, well, what does all of this mean? Not just beyond BCP, but thinking about the relationships, the vendors, and even categorizing them in accordance with how risky they are to the business, and what do you do if something goes down? So And the sad thing is that in the US today, we don't really have operational resilience, I guess, robust rules yet, the way that they do in other jurisdictions like the UK or Singapore or even in the EU. But this is something that we're trying to figure out as an industry for those of us that operate in the US. What does operational resilience mean to us?
Last question, and then we'll go into the Q&A. So looking into 2025, over the next few years, what macro global trends are you expecting to impact the compliance landscape? And what must financial institutions do to remain proactive in their approach to remain compliant?
Thanks. I mean, I'll start. Right? Look, I think the volume of regulatory change right now is something that we're all struggling with, right? That's where AI is starting to come in to help us, right? There's a lot of solutions that are now starting to compartmentalize the regulatory changes, summarize them, feed them in, and then you can decide what it is that impacts your particular, bank or financial institution. But then the challenge is how do you help shape that AI so you're only seeing what is really impactful to you? Because otherwise, again, you get, it's boiling the ocean. So regulatory change and being able to utilize AI to better funnel that is one of the areas. AI and just in general and the maturation of AI within compliance space is going to be a continued evolution for us. We talk about AI as brand new. Yes, it is brand new, but it's also been part of our models forever, right? So governance over AI, which should look similar to the governance over risk modeling, right? Over models themselves. So that's kind of another area. Next is continuing to ensure that the front office and senior management understand their obligations in terms of owning the risk, right? This is something you're going to hear from your supervisor regulators a lot, is where's the first line? Where are they? How are they demonstrating that they're owning the risk? What are they doing? How are they supervising it? How are they monitoring it? And then what are you doing as a compliance function to pressure test that, right? To monitor and pressure test that. That's, those are kind of the key elements, I think, for going forward.
I'm going to jump on the AI bandwagon. So we're talking about 2025. I envision, at least in the US, that the NIST framework is going to become the gold standard for the way in which we treat and try and think about governance around various different AI use cases. I can't speak for all banks, but I can say for ours, we're a little conservative, and we're just trying to figure out the best use cases for AI. We've developed about 7 of them, and we have a working group that is trying to create governance around this, thinking about established regulations like model risk, thinking about even third-party risk management and how to incorporate this into an overall framework. So I envision, just given the flexibility of the NIST framework, that for at least US-based firms, that'll become part of the way that we think about governance, although because we have to deal with things on an enterprise-wide level, it's going to be trying to marry the flexibility around those frameworks against more stricter, robust types frameworks like the EU AI Act. So that's one thing I predict. The second thing that I predict is that I do see comprehensive federal regulations around privacy. You talked earlier, Supriyo, about tech risk not just meaning cybersecurity, it's data protection, there's privacy considerations, and I'm stealing that from the Senate working group that looked into whether or not the US will adopt an AI, what they're going to do for AI regulation. And they said very clearly that they don't want to stifle innovation in the US, but at the same time, they do recognize the risks inherent with AI and the way that it ingests information. We all can talk about all of the risks inherent with the use related to that. But I do see, hopefully I'm right, and if not, you guys can yell at me next year, 2025, some discussion, some proposed regulation around comprehensive privacy regulations.
So I'll jump on the AI bandwagon as well, but I'll just maybe give it a slightly different spin. So we're kind of two aspects of this, right? One is how can AI enhance the compliance program? And I think we're early days. We're starting to think about that. We've got working groups, particularly in financial crimes. There's some pretty interesting and, maybe compelling use cases around KYC management, maybe sanctions, like things that are very labor intensive, very administrative. Maybe there's use cases that are low-hanging fruit from an AI perspective. But also literally on my desk now is global policy. We're subject to the EU AI Act, which Sabina mentioned. So it's got extraterritorial impact. What does that mean, right? What does it mean for our program here? How does the Americas align with the global policy? And as part of that, I've already got to start thinking about, okay, what are the controls that we're going to need, right? And to Howard's earlier point, it kind of reminds me of like algo, like when we thought about algo trading and, what are the belts and suspenders you put in place? What are the speed bumps? How do you ensure that you don't have conflicts of interest, that you're not gaming the system? AI has some of those same considerations. And if you look at some of the guidance, for example, or proposed rules from CFTC or SEC and others, they're already kind of mirroring what they used to say about algo back in the day, right? So compliance has to be thinking about not just how we use it for ourselves, but how do we also, as a compliance program, what's the standard for the responsible use of AI? So that's a hot topic and it's current.
I'm just going to quickly overlay that with a little bit of a different lens, because I agree with all of that. But I think as we move forward, when you sit in technology or you sit in a governance function like compliance, you cannot ignore the geopolitical landscape. And I say that for the fact that data is power. Information is power. And how we're utilizing and harnessing that is really important, so that you're not inadvertently creating risks for colleagues you may have in jurisdictions that are at geopolitical odds with the US. You can't ignore that. And I think you have to just keep an eye on that as you're starting to implement AI, whether it's for our own compliance programs, whether as an organization you're using it for customer data, for consolidation of data, for trending, for all the things that a foreign government could potentially interpret as violative of their laws. And I think we have to just stay connected on those things and monitor them in a way that you cannot ignore them, because they're not going away. And if anything, I think they're going to only expand. So it's just something that you have to tuck away here and kind of just keep track of. And it goes to the regulatory change perspective as well. They're coming fast and furious, and you have to factor that in with how you use AI and other technologies that are just bringing all of this information together.
Can I just mention one more thing that I forgot to mention? There is also an element of controlling from an end user perspective, right? Because now it's like the flavor of the day, right? And so how do you control proliferation of people using AI in your organization without having sufficient awareness at the enterprise level, containing that risk, managing that risk? And so, in the cyber world, there's the concept of shadow IT. It's a big topic for the regulators. And how do you control shadow IT? AI can also become a shadow IT if you don't watch it.
And just on data governance generally, I can tell you, Sabina, stop, so I'll just say this quick. So part of the information and data that's out there is also available to our consumers and our stakeholders, and that's also going to represent a risk. You saw this with Silicon Valley Bank. We also saw this with GameStop, and how outsiders, firms, individuals outside of the organization and customers can also control the narrative. And I think that's something that into 2025 we need to be cognizant of. Data is available not only to us, but to key stakeholders.
On the topic, one of the questions that popped up was regarding AI. How are you addressing ethical concerns? And what frameworks are you using to govern AI compliance?
So I'll take a stab at that, because we're thinking about that. But the policy is a start, right? So minimum global standards, to the extent that there's jurisdictional differences. We have lived with this in many other contexts in the foreign banks where, maybe you have a minimum global standard, but you have a jurisdictional uplift if you have local nuances, right? But the conduct piece is an interesting one. I think we have to figure out, I don't know the answer, but I think we have to think about what's a violative use of AI in the organization that doesn't meet our conduct regimes and figure out how that slots into our conduct. We all have, I think, conduct regimes and committees that assess potential violative conduct, and then there's outcome management, right? Consequence management. I think we have to think about that in the AI context as well, but that's literally like brand new.
The use of technology in general in our industry is not new. And there's always been sectoral regulations that govern issues that touch on ethical considerations, like if you're using AI, for example, around decision-making related to hiring, you're subject to Title VII. So similarly, if you're going to use some sort of technology that's AI-driven, and maybe it's using something like machine learning, and there's the potential for inherent bias, I mean, this is one of the things that we're trying to struggle with right now in terms of creating some sort of system of governance. It's being able to hire experts who understand the code and can see when the machine has changed its way of thinking, and breaking that down and keeping audit trails of it and dissecting it and ensuring that it's not being utilized in a discriminatory way. Now, I'll tell you, I don't have the expertise to do that, but hopefully we'll hire somebody who will do that.
Thank you. One question that came up: when working with third-party RegTech providers, how do you balance the need for speed and innovation with the need for thorough due diligence, in particularly highly regulated environments?
We go slow, sadly. And it's a really annoying, but at the same time, it's just not worth the risk. There are it's almost like a tick the box exercise, but there's certain key things that have to be satisfied. There's an urgent relationship. You can certainly try and push our procurement, or we have what we call an onboarding team to try and push things through quickly. But at the end of the day, there's no shortcuts. They still have to meet all of the requirements.
Thank you.
And I would just add the compliance needs to be in there early in the RFP process. Ensure that you're strategically aligned with your IT partners that are maybe taking the lead in kind of the technology aspects, but especially with now information security hurdles, right? And I know I've had some RFPs fall through because, didn't meet our information security requirements, like gating requirements at the global level. So, before you spend a lot of time, make sure you understand the info security aspects so that, you know whether there's like showstoppers and it doesn't make sense. So you're not wasting your time and the vendor's time. I think that's a key thing.
Yeah, I think when there are times that you can push when it seems to be getting bogged down in nonsense, right? If it's sitting on someone's desk and you haven't gotten a response that's when you push. But you can't push around the fundamentals of it, right? If things are really being examined and it's taking time, it has to take that time.
Thank you. We have another question that popped up. One, should compliance be merged with cybersecurity in the near future due to the changing digital landscape?
No.
Thoughts?
I'm going to say a big no on that.
Go ahead.
No.
Then I won't have a job.
I mean, it may change in the future. Right now I have it, but there's arguments pro and con, right? But at the end of the day, even if, let's say, the CISO is separate, I think the chief compliance officer I have the saying, and kind of like Howard says, walk, talk, mail, I have the saying, all roads lead back to compliance at some point. And so you have to ensure if it's living under a separate umbrella in your organization, you still have to keep tabs on it.
Yeah, I think that partnership is critical, but I really do, all joking aside, I see them as two distinct roles for the organization that have to remain closely aligned on a lot of things, but I just don't envision it working well if you combine them. I think you end up losing, the CISO role is a broad technology first driven role, right? What are the protections? What's the governance? Compliance is that and much more. That's not just technology focused, it's a whole host of other things. And so I think there needs to be that close alignment, but I'm not sure I see it really kind of falling or being integrated.
Yeah, I would agree. I mean, I would look at it the same way I look at financial and non-financial risk, right? It's like we're brothers or sisters and we work together and we collaborate together, but we think differently and we kind of compartmentalize things in a different way. So while we have to collaborate, I don't think one rolling into the other is the best model.
I mentioned earlier that I'm a 3 lines of defense purist, And technically, depends on where it sits in your organization, but compliance is a second line function. It can also be a first line for certain key responsibilities versus, let's say, CISO. Again, it depends on the organization. As you mentioned, that's a frontline function. Having said that, I do think that the skill set that's required today in order to properly implement the controls you need is changing, and you certainly need to have subject matter experts. Let me even call it a line and a half. I know we don't always like that term, but a line and a half of specialists that can work in the first line and really help to understand the technology, the data, to have the requisite skills to be able to help the organization.
Agree.
And likewise, in our organization, I am also seeing compliance help some of the first line functions. So for example, when it comes to things like trade surveillance or checking the actual integrity of the actual systems that we utilize, that doesn't sit with IT. We have in-house experts that sit in compliance, that do compliance work, that help IT and partner with them to check the technology and make sure that it's functioning in accordance with the regulatory requirements.
Thank you. We have one more question before we wrap up. With the growth in data sources underway, how are you managing data governance and ensuring compliance while leveraging data for more effective risk management?
We have a data governance group, basically, and they work through a series of committees, and compliance sits on all of those committees, as does privacy, which is, they both roll up to me, but they're distinct roles within my organization. And I think that's how we're helping to shape some of the data governance decisioning that's happening. Because it is really important, and there's going to be things that have to be considered that if you're viewing it purely through a first-line lens of customer data, sales, cross-selling, all of that, you may miss some of the more nuanced things that you have to consider from a regulatory perspective.
We're similar. We have a chief data office globally, and we have one locally, and they're thinking about and building out the framework around data risk, data governance, defining critical data elements, a lot of which, of course, as you would imagine, relate to things that are like, for example, transaction reporting. So we have a sister function that is responsible for that.
I would add something similar. Ours is actually at the enterprise-wide level. And one of the things that we're looking at as well is with the changes in regulations around, potentially in the US, around operational resilience, how that's going to impact some of the activities of the group.
Yeah, I think we have a similar setup, right? A chief data officer, and it's a group that's being built out, because it all does begin and end with good data, right? But we also have within that, I think similar to what some of you are saying, right? Data champions within each group. So you own your own data, and then you work with the chief data officer and data group, right?
Great. Any other questions?
While we're waiting and we're talking about expressions, mine is for compliance. Compliance is the garbage dump of responsibilities that no one wants. So just give it to me.
Okay, that's it. Thank you.
There was
Thanks,
one
everyone.
question over there.